Dollar loiters off highs as traders eye CPI. Singapore. The dollar lurked just below recent highs on Tuesday as traders waited for U.S. inflation statistics due later within the week, which can take pressure off the Federal Reserve and positioned it on the greenback if it indicates the pace of fee rises has peaked. The data is due on Wednesday and the anticipation is probably to preserve matters calm until then. The Australian and New Zealand dollars rose in a single day and were steady within the pre-CPI calm in Asia. The Aussie held profits at $0.6977. The Kiwi did likewise at $0.6276, leaving each just above their 50-day transferring averages. Sterling held at $1.2081 and the euro turned into stuck just above parity at $1.0189, with the continent's energy disaster meaning it is able to miss out on a boost if the dollar weakened. The yen rose barely to 134.75, consistent with dollar. On Tuesday, a New York Fed survey showed purchasers' inflation expectancies fell sharply in July, perhaps easing some of the upward pressure on prices from last week's strong jobs figures. Expectations that the Fed might also announce another 75 basis factor rate hike on September 21 have risen on the again of Friday's strong U.S. July payrolls report, stated Jane Foley, senior Forex strategist at Rabobank. Later this week, the July U.S. CPI inflation release is anticipated to show a few moderation in inflation pressures, she stated. This may additionally now be sufficient for the Fed to relax. Economists polled via see year-on-year headline inflation at 8.7%, highly high, however under remaining months' 9.1% figure. Money market futures display buyers see approximately a two-thirds threat of a 75 BP hike next month and feature started out pushing expectations for fee cuts again, deeper into 2023. 2-year Treasury yields, which track short-term U.S. rate expectations, held at 3.2157% on Tuesday, with benchmark 10-year yields 45 bits per second below that at 2.7572%. An upside CPI surprise may want to power yields and the dollar higher. Investors have emerged as more and more positive of their view that inflation will drop returned fairly fast, and that it's going to finally continue to be around the Fed's target, said Thomas Matthews of Capital Economics. The market is arguably pretty vulnerable to a wonder on inflation, need to any evidence collect its miles staying excessive longer than predicted. That could also probably activate a sharper response from the Fed, and see the bond market sell-off resume in earnest.